Thanks for taking the call. So I want you to introduce yourself to everyone. Tell us who you are and what you do.
Hi, everyone. Greg Tannor, Executive Managing Director of Lee & Associates in New York City. I am a commercial real estate broker, primarily focused on retail leasing. I represent a lot of tenants and landlords here in the city. I've also done it nationally as well. Been doing this for the past 20 years.
Awesome. So I want to talk commercial a little bit with you, since you're an expert. What are you seeing? What are you projecting out for the next 3, 6, 9, 10, 12 months? What's your take on it?
It really depends on how much New York City and the United States can control the virus in terms of mandated quarantines and isolation. I think if we can get our hands on controlling the curve and flattening the curve, hopefully in the next 2-3 months, we can get back to business as usual. I think everybody's itching to get out of their apartments and their homes and starting to get back into reality. I got dressed today. Usually I'm in pajamas, but it felt good to actually put some clothes on for the first time in a week.
Right. So it's interesting to hear that. I mean, I know you deal with a lot of big restaurant groups. What are they telling you? I know we spoke, a little bit earlier about certain restaurant groups, Carbone. Do you want to share your insight on that?
Yeah, I mean, listen, everybody is suffering across New York and pretty much across the country. The big restaurant groups like Danny Meyer's group just laid off 80% of their workforce. Gerber Group laid off 400 people. I mean, all the restaurants are closed for dining in, which means they don't need their support staff like they normally have on a regular day of dining. It's tough. I think a lot of the mom and pop restaurants are suffering the hardest because they don't have cash reserve to get through a difficult time. Probably see anywhere between 40 to 60% of these restaurants that have shut down never open again. I mean, a lot of the restaurants right now in the city have limited menus and limited hours for delivery and takeout. I was just trying to order Chopped for lunch and they were closed on 52nd Street. So it really, it's really hard to say how we're going to come out of this. Obviously, in New York, we're a strong city. United States, strong country. We'll bounce back and we'll be stronger because of this crisis.
Right. This takes me to my next question that we were talking about earlier. Relief for tenants. So can you speak to that? What's going to come down the pipeline and how can they go about that with their landlords?
I mean, listen, the government is trying to do whatever they can right now to subsidize some of these rent payments. A good indication of what's going on in London. The British government offered half the rent for commercial tenants being paid by the government to the landlord. So if you are paying £50,000 per year, the government's given £25,000 to kind of soften the blow. In addition to that, I mean, landlords are realistic and they understand for the most part what's going on. I mean, their business is suffering as well. Until we see some kind of freeze and an overall economy freeze, meaning don't pay taxes, don't pay debt service on your buildings, it's really hard for a landlord to say, don't pay me anything right now. I think the landlords that are in a cash position and have cash reserve will be a little bit more generous to their retailers, understanding that their business makes up the building. Office tenants, retail tenants, especially being at the base of these ginormous office buildings and residential buildings, they offer an amenity to their tenants. You don't want to lose your tenant because in a crisis like this that's hitting it globally as a pandemic, when we're out of this crisis, how many tenants are going to be there to take space? Speaking on the retail side, the restaurants are hurting, health clubs are hurting, regular dry use retail is hurting. So when we're allowed to conduct our business like we were pre-Corona, let's call it BC, before Corona, I don't see there being 3, 4, 5 tenants for a space. You're going to be lucky if there's 1 tenant for a space. So landlords really have to understand saying, you know what, maybe I'll give my tenant a break because I want to be in position that this tenant is here. They're strong, they're stable. They can make it through this if I help them out. And I want to have a tenant when we're out of the crisis and it's business as usual.
Right. So if 30 or 40% of the people aren't going to be able to, ramp things back up, what do you think is going to happen with these retail spaces? Is there any um, opportunity, or is there anything that you can share?
Tons of opportunity. No different. I lived through this crisis in 2008, 2009 with the Great Recession here in the city, and I was doing retail leasing. A lot of the people were sitting on their hands, just looking up at the sky, reading books, not understanding what to do. There are trends in the market, and any down cycle breeds new opportunity. And it's just about being smart out there and understanding who are the people that can survive through a crisis like this, who's sustainable when you're competing with online business. Medical obviously was on the rise before this. It's going to be on the rise after this. Health clubs are going to be back on the rise as long as they're taking the precautionary measures to ensure their clients that there is safety elements in their gyms of sanitizing. But these are the type of businesses that bounce back quickly. When people are allowed out of their homes and apartments, they're going to immediately want to go and work out. If unemployment reaches 20%, people have to go back to the gym, feel good about themselves, look better, feel better, because they're going to be competing with a new generation that's coming out of college and getting jobs. It's no different than what happened in 2008, 2009. This is just global. So it's really about sustainability and the type of tenants that are going to be expanding. In 2008, 2009, when the housing market collapsed, which Adam, I'm sure you're very well aware of, I looked at this market and said, what's going to expand into retail when a housing market collapses? Everybody's saving money. They're not spending it on themselves. What did they do? They spent it on their children, because children always need clothing. They spent it on their animals, because animals always need things. And they spent it on furniture. Furniture sector became alive again. And I did about 120,000 square feet of leasing in 2009 with one furniture tenant in particular, because people were starting to remodel their house instead of move and relocate.
Great. I know this is not part of the scope here, but I was on that call with Mickey Naftali, and like with this too shall pass and sustainability, at times when the planes flew into the towers, they never thought they'd build 50, 60, 70 floor towers and be selling 40, 50 million, $60 million penthouses to people because they'd be afraid of the planes. But eventually that passed, and New York is tough, New York is strong, and we rebuild. And I guess that's kind of what you're saying here, is that the sustainability, people will come back in, and there's going to be retail that gyms or restaurants that people are going to want to get out to go to, right?
People can't wait to go out again. I'm telling you, all my friends that are stuck in their house, they're just saying, Greg, I can't wait to go out and have a nice meal, sit down, actually put a pair of jeans on instead of another pair of sweatpants, enjoy a glass of wine, and someone serving you dinner.
Exactly. I look forward to doing that with you and grabbing some drinks again like we did a couple weeks ago. So I want to pivot a little bit. What are you seeing as far as deal flow right now? So deals that are happening, like,
I mean, it's slow. It's obviously apparent because of the stock markets fluttering all over the place, up 2,000, down 2,000. The market is slow. There's still deals out there. People are still talking. I'm still negotiating term sheets with my tenants. We're being very opportunistic right now in this market and just preparing ourselves for the coming weeks and months when we can get back to being normal. And we're going to be in position to take this market. I mean, but right now it is slow. We have live conferences on Zoom with our entire office. We did one yesterday. It was a happy hour / networking / how do we come out of this? And it was great. There was 90 people on the computer and we were all chatting with each other. Everybody had a drink in their hand. I had water for the first time in my life. And we were just having a great time. And it just helps with camaraderie. And people just need to basically stay sane. Thank God for all this technology that we have, that we can conduct business with social distancing. And there's still work to be done.
great. So I was talking to someone earlier in the week that was looking for medical space, and they were just about to put an offer in, and they were getting a build out. And so what would be they didn't put an offer in yet, but what would be your guidance for that particular client?
put the offer in, make it 30 to 40% less than the asking price, drag out the construction period, ask for additional free time, and go from there. I mean, if you look at a deal on the commercial side and stuff that I work on, I'm looking at new development projects with my retailers going in, either a supermarket or a health club. I have about a year, year and a half of construction time. Think about that. If I do finish a deal April 1, I'm not opening the doors until third quarter 2021. This crisis is long gone by then. So I would say it's a very good time to renegotiate your term sheets, your LOIs with your landlords, with your tenants, and understand that, yes, we will come out of this, but it's definitely going to be a tenant's market right now, because I don't know how many tenants are behind each space. There might be one, there might be zero. And a landlord is going to look at this and say, I have a tenant, I'm going to take this deal. Even if I'm not going to get paid in a year, I know in a year I'm going to start to get rental income. It's all about cash flow and covering debt service.
Awesome. So is there, I really appreciate your time today. Is there anything you want to add before we let people know how they can get in touch with you directly?
I think that's it. I'm always here for questions, answers. Posted something on my LinkedIn page yesterday saying, if you have any questions, if you're a tenant, a landlord, you want some kind of guidance on your leases, call me.
Okay. And what's the best way to get in touch with you?
Email is the best way. Tannor, GTANNOR @lee-associates.com.
Great. And if anyone needs to get in touch with you, they can DM me through Facebook and I will direct them over to you. So, Greg, I really thank you for your time.
My pleasure.
I hope you're staying safe with your family, and I look forward to seeing you on the other side of this.
You got it, Adam. Thanks.